So we're talking Deere this morning, just taking a quick look at what the stock is doing. It's down about 2.7% today. Still a winner on the year, but obviously investors not impressed with these earnings. Walk us through what Deere had to say.
Oh dear, what can the matter be? It must be fine. Well, you're looking at coming in about 10% EPS lower than expected. And you have to understand, this company manages very well. They've gone 11 quarters in a row of beating expectations. That's almost 4 years. So this is a rare miss from Deere. But look at the challenging backdrop they told us. And again, we all saw it from other companies, which is supply chain disruption. Okay, we know that. But really, to try to maze through that in logistics, it costs more to get the supplies to do what they're doing. You also have a stronger dollar, which, again, a lot of people like stronger dollars. But if you're a multinational, like Deere and so many, the Dow Jones and S&P 500, it hurts a little bit. So again, that's why investors are looking at, coming into today, the stock was up about 5% year to date. And I can say, Caroline, one of the rare companies that actually was above its 200-day moving average, 50-day moving average, and so forth. Now, we can give that all back in one full swoop today, being down, as you said, 2.7%. But I hope that's not the case.
You talk about some of those headwinds, the supply chain disruptions, inflation, stronger dollar. Obviously, for so many people, a headwind, or companies too, a headwind is higher food prices. How does food inflation impact a company like Deere?
Right, so that's impacted them as well. But I think longer term, it's going to help them. There's been a great deglobalization going on. Remember, everything's globalization and supply chains. And then Russia, Ukraine happened. You say, wait a second, 30% of the world's grain comes from Russia, as does potash, which is part of fertilizer. I think a lot more countries over time, with this kind of need to be energy independent, food independent, even if higher inflation, as you mentioned. But I think there's going to be some good tailwinds for this company, Deere. Again, once it gets through this digestion of these numbers, is longer term, country after country is going to want to go and say, you know what, we don't want to be dependent on Russia. We don't want to be dependent on China. We want to do this at home. And that's going to be a big win for Deere longer term.
So it wasn't just an earnings miss, though. They also cut their outlook. Why was that?
They did. And that's kind of the mid-range of where they had it. So while it was a cut, I think the challenges are still going to be here. I think they're still going to have supply chain disruptions, inflation, stronger dollar. The Fed's going to probably raise rates a couple more times. So, competing with the stronger dollar and what they're doing. So I think there's some headwinds. But what's interesting, though, even with all these things going on, and we'll hear more in the call at 10 a.m., this company said, still going forward, sales year over year from now to next year will exceed 20%. So while on one hand they missed this number, while they've guided it a little bit mid-range, they're still growing at 20% with a decent dividend of 4.5%. So investors probably should shy away a little bit now, because the analysts are going to all jump on the bandwagon and cut guidance and lower the numbers and targets. They weren't there before all this happened, but afterwards we'll see all this, Caroline. And that's why I think investors, if they're kind of keep watching this, make it a good entry point in the next couple of weeks.
Yeah, I was going to ask you about that, because I was taking a look at what analysts had to say. They're still actually pretty bullish on Deere. Obviously, we may see some adjustments between now and then, but this is a little bit of a dip for a stock that's done quite well this year. Would you buy on this dip?
I would. I mean, for longer term investors that like the story, not only about construction and agriculture. I mean, look, this is an earth moving company, right? They move things around. And it looks like there's going to be more of that based on all the things that we've seen. China's draconian lockdowns have really kind of cut, their manufacturing capacities. And now, even companies like Apple say, well, I think I'll go over here to Vietnam and get our stuff. So I think they're going to take advantage of this deglobalization. They're probably one of the best companies positioned for this move that we're seeing.